Timing is everything in real estate investing. Stick around, I'll show you 4 reasons why. Hey everybody, Greg Barron, Professor of Real Estate. Thanks for joining the channel today. Today we're going to talk about how timing in real estate is everything. So real estate investment's like a roller coaster. You have this long ride up to anticipation where you know you're going to reach a peak, and then ultimately you're going to go down screaming. In other phases, you're going to be doing loop to loops and you're going to get disoriented and not know where the bottom or top is, ultimately coming to a slow stop, which usually predicts the next phase of rising in anticipation. It goes over and over and over again like that. So investing in real estate is very similar. The very classic example that I want to show you today has 4 specific quadrants. And if you study these quadrants and if you relate them to your particular asset class, you're much more probable to be successful in your real estate investing, whether it's single family homes, healthcare, whether it's multifamily, industrial, or God forbid, office. Use these quadrants as a form of predictive tool. And today we're going to go over some graphs that I think is going to help you. So there's a classic example that almost everybody that's an expert in the business uses to look at. Now, not every time it's going to follow in these 4 quadrants, but it's very important to get a general understanding of these quadrants and how they apply to your specific point in time, to your specific asset class. So here's the 4 phases in timing of real estate. First, you'll have the recovery phase. This phase, you'll notice, is declining vacancy and no new construction. Typically, it follows after phase 4, which is what I'll call a recessionary time in real estate investing. But let's keep moving up this roller coaster to the top of the peak, and you'll see phase 2, which is the expansion phase. Normally, you have a little bit of declining vacancy and new construction. Remember, as I explained in my prior videos, new construction usually takes a couple of years to execute. So usually they are predicting meeting this demand during a time of recovery, but not in what we'll call phase 3, which is hypersupply. So new construction almost always starts in phase 2. So phase 2 is like the roller coaster. Everybody's excited. Everybody's taking this ramp up to where they know that they're going to ultimately face excitement and hit a peak. Phase 2 is still the point in time where a new product is still coming online. Rents are increasing to this point, but they're going to reach a peak. As we enter into phase 3, which is what we call hypersupply, you'll see that there's increasing vacancy and new construction is still coming online. So you've got oversupply and you've also got an increasing vacancy. Number 4 is your recessionary period. How far is this roller coaster going to go? When you hit phase 4, usually you're asking yourself, oh my God, how far is this market going to drop? So at this point, let me overlay a few other things for the 4 quadrants to show you a little more description so that maybe it'll help you in your investing determination. So in phase 1 recovery, you see that we have negative rental growth at the very start, and then we have below inflation rental growth here. Ultimately, it reaches over a long-term occupancy average, which at this point, rents rise rapidly toward new construction levels, and you have high rent growth in tight markets. So this particular area right here is where most people tend to enter. You don't necessarily want to play in phase 2 unless you've got deep pockets and you're one of the big boys, and I'll show you why in just a second. Ultimately, you hit the peak of the roller coaster and demand and supply reach an equilibrium point. As you fall down the roller coaster in phase 3, which we'll call hypersupply, you see rent growth positive, but it is declining at every step of the way until ultimately you get below your long-term occupancy average here, which is usually less than 10 to 5%, and you have negative rent growth. So you might ask the question, where do I enter When are the best times to sell? And ultimately, is it different for different asset classes? And my answer is absolutely. Before we jump into the next graph, though, let me explain where we've been and where I think we are right now. So if I had to ask the average listener right now, where do you think the peak would be? Most would say the demand and supply equilibrium point right here was somewhere in February of 2022. That's when everybody recognized that we very possibly could be going back down the roller coaster. As far as I'm concerned, I started disposing most of the real estate that I owned that I knew I was going to exit between this point and demand equilibrium. As a matter of fact, the very last piece of property I sold was in February of 22, which was really at the peak. So where are we today? If I back up just a little bit and you think, well, where did most of the new construction starts? So if I draw a line right here, I would say that most of the new construction starts happened about 2019 to 2020. Now remember, if this is 2020, the majority of your new construction is going to come online a couple of years after that. So your demand and supply equilibrium, where you hit the highest amount of long-term occupancy and the most amount of rent growth and the best equilibrium of product, happened at this point right around the first quarter of 2022. Now, some people might disagree with me. That's what I experienced. New construction continued and has continued to this point. So we're well into the second quarter of 2024, which means that there's still product that's been coming online that started 2 years ago, and rents are already starting to slow. And so this hyper supply will happen right about here. I would make a strong case that today we are right around this point right here. You've been rent positive on growth, but you're seeing, especially in multifamily, more concessions happen. Most of the product that would have come online is now online. So we're at this point right here as of August of 2024. So before I get into where my buy zones are, and I would say the perfect spot to be for a real estate investor, let me explain to you how the different asset classes could be at a different point with each asset class on this particular roller coaster curve that we're looking at. Now, I'm taking this particular graph from the fourth quarter of 2023. So these particular asset classes have actually moved a little further over on the curve than they are right now, but you'll get the general context of how I'm going to describe this. So you'll see that office, as far as where they were in the timing of the market, was already well over into phase 4 at the bottom of the trough. Most people say that at 20 to 25% occupancy nationally, valuations in the tank, they're pretty well already in this quadrant. But office is not necessarily a lead lag indicator like it used to be, because we had a primary disruption in 2020. So I would normally say that office would group tighter in these asset classes under normal situations. And historically, if you looked at this same graph, office would be well positioned between housing, multifamily, and industrial, not necessarily in that order. But today, because of the pandemic, because of the work from home, all bets are off with office, and they are clearly at the bottom of the graph in phase 4 for what I would call a recessionary investment quality asset. So again, let's look at the predictability of the model to see where we are with each specific asset class, and maybe this will help you in some of the things that you're looking at or understand the concept a little bit more. The green represents industrial, the black represents healthcare, the yellow represents multifamily, and the blue is retail. So typically, if you use this same graph to try to predict where you are in the timing of the real estate, housing is the lead indicator. Multifamily is second, followed closely by commercial and industrial. In healthcare, you really never know, but it follows somewhere in that grouping, and it's usually in that order. Again, office is in the tank now because of reasons that nobody really predicted, but it is our reality at this point in time. So if you take a look at this graph, I would suggest today that this yellow, as far as multifamily, is actually about a quarter on the downside of the oversupply phase. You've heard me talk about certain markets that are still strong, but they're oversupplied. They're now just seeing some rent concessions happen. So you're going to have a negative rent growth right here, all the way down into this point. Industrial has been a little bit more stubborn. It's certainly not at the peak. Now is not the time to maximize those values, but it's still not a, oh my God, kind of time. And then healthcare, it just depends upon which demographic that you're in. So I'm going to concentrate primarily in the office and the multifamily. So I've heard a lot of YouTubers say anytime is a time to buy real estate. Well, I would absolutely disagree. Typically, those are the guys that have YouTube channels and don't have any real estate and don't have any historical context to buying and selling. So if you ask me, are there any quadrants that I would not buy in? I would say, yeah, I would not buy in quadrant 3, primarily because I don't know how far the market is yet to correct. Rents are still declining. I'm at the backside of oversupply, so I've still got a way to go, and I want to be patient. I want to move into phase 4, which is recession, which all the supply that was coming online is already there. We're experiencing that correction. So in a perfect world, I'm waiting to the bottom of phase 4 for my buy zone. On the flip side of this, would I buy in phase 2 in the expansionary period? My comment would be, if I'm doing development from ground up, there's a strong possibility I would enter in this phase, but I sure as heck would want to enter in the first part of the expansionary phase to take the rest of the ride up, because I don't want to get caught on the backside in trying to make my performer work. Well, what about phase 1 recovery? My comment there would be, yeah, I want to be on the lower side of phase 1 recovery because I've got negative rental growth. I've got no new properties, but that's the point that you're going to catch this wave back up, which if you look to the other side on phase 4, which correlates to it, you're going to have those buying opportunities when rent concessions are there, oversupply has happened, people are throwing their keys back to the banks, and those that had entered in at the high end of phase 2 are going, I made the wrong decision. So once again, to summarize, where are my buy zones? My buy zones are really between the lower quadrants of phase 1 recovery and phase 4 recession, which is a quadrant that I absolutely don't want to purchase in. Usually it's in phase 3. I just want to be patient. Frankly, that's still where we are right now. Which is the phase that it's a maybe? It's quadrant 2. But I want to be at the lower end of quadrant 2, not at the upper end when demand and supply are reaching their equilibrium point. So again, I'll end on some good news. If you haven't participated in the last year, great for you. If you liquidated back in 2022 for the most part to get ready, like we did, even better. We are clearly in quadrant 3 at this point in time, but not fully into quadrant 4 unless you've been in an office and then life sucks for you. So that's why we continue to say, educate yourself, because we are moving into quadrant 4. There will be some superior buying opportunities for you to take advantage of this next roller coaster ride back up again. If you ask me, I think it's going to be in the last quarter of 24 and all the way into the first and second quarters of 25 and maybe into 26. So as always, educate, evaluate, so that you can be ready to execute to increase your own personal wealth. I hope this information helps you to make better buying decisions and real estate in the future. If you enjoy it, be sure and like and subscribe. We'll see you soon.